Good morning, everybody. Mike Bakke, Princetontrader.com here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES, and what we saw yesterday was a push lower by the bears in the morning down to 1865.75. But what the bears allowed the bulls to do was to bounce it from there and then create a steady series of higher lows throughout the day. 68, 70, 72. Finally, the weight of all that support caused a little bit of a breakout near the end of the day. It's come back in now, and we've traded down into 74 to 73, 75 in the overnight, which is the area of the daily pivot. We've bounced off that a little bit, but today is a very important day. The bulls with this move, and it bounced essentially off of the 9-day simple moving average. The bulls with this move really do have clear sailing to new highs if they want it. They need to push. It's very susceptible to a squeeze, especially on a move above 1882. That pretty much gets you back up to 87, 88, and then it becomes a question of whether we're going to have matching highs or whether we're going to have new highs. So I will be looking at the 82 area today and then at 88. If the bears can break the daily pivot at 73.75, then it exposes all the key areas from yesterday. 70, 68, and ultimately it tests the lows at 65.75. The bears did get their lower low yesterday versus the Friday low. What they would need to do today is to get another lower low. And through the pressure of those successive lower lows, then convince the market essentially that we need to go down and do a deeper test of the middle Bollinger Band, which has now jumped up to 1848. It's jumping about 4 handles a day as it sheds these lower prices here. If we continue to chop, and the potential exists for a range between 87 and 66. If we chop in that range, number one, it would be a great trader's market. Number two, it would give the middle band an opportunity to catch up to price and get that pullback without a pullback that I was discussing last week. So there's a lot more questions today than there are answers, but understand that in this kind of an uptrend, in this kind of a market, your fallback position is that the bears are going to push things in a significant fashion. Your plan A always needs to be, where's the dip? Where are the bears going to blow it? So you can identify it and get on board. And that's essentially what happened yesterday afternoon when we demonstrated a sustained inability to get back through 1870. So lots to watch today. We'll see how it plays out. Everybody have a fantastic trading day. Use stops and be hedged. Ukraine is over, but it's not over. Just be aware of what's going on, and don't be hanging around with unstopped futures positions, because you never know what you're going to come back to. Check us out on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.